Good morning, traders. It is 8:01 a.m. Chicago time on the 25th of January 2016. It's a Monday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not too much to report overnight. I've added a new section to my daily prep journal for overnight sentiment. So I'll run through these numbers real quick. Oil's down 4%, gold's up 1%, U.S. Treasuries up between 15 and 40 basis points. The Eurozone Treasuries up around 10 basis points. The Asian equities, the Nikkei is up 0.9%, Hang Seng 1.4%. And the Eurozone equities, the FTSE's down 40 basis points, Euro stocks down 1%, and the FDAX is down 85 basis points. U.S. equities are down around 50 basis points. Now, it's great. Everybody can pull up any website, any financial website, and get those numbers. But the idea here is to look at the overall sentiment, investor sentiment, coming into the session. And the conclusion to all of that is that it seems that investor sentiment, despite the strength seen in Asia, the overall investor sentiment seems to be risk averse coming into today. So that's the point I'm making. Is that where's the money flowing? Money has to flow from one place to another. Either it's being put into risk assets, meaning stocks, equities, equity indices, commodities, things like that, or it's being moved to safety, or we call that flight to safety, move to safety, which is metals, treasuries, and so on. So with gold being up 1%, and I think silver's up about 1.3%. It seems like money is moving into metals. It's more of a protective position. So that colors our view of today slightly. Key news overnight, 4 key executives are leaving Twitter as it undergoes a shakeup. Japan's trade deficit narrowed for a fifth straight year in 2015, falling to 2.8 trillion yen or $23.6 billion. Exports fell 8% year on year. Shipments to China, Japan's largest trading partner, sank 8.6% year on year. German IFO business climate fell to 107.3 from 108.6 in December. It's quite a drop, while business expectations are quote unquote clouded over significantly. The Russian economy contracted 3.7%. Russia contracted 3.7% in 2015, making for the biggest drop in 6 years. The weakness in Russia comes as a result of the sharp drop in oil prices and the economic sanctions imposed by the West as the result of the annexation of Crimea. McDonald's just reported $1.31 versus $1.23, 6.34 billion versus 6.24 billion. It says it's expanding in Russia. OPEC Secretary General Abadri says oil surplus mostly caused by OPEC non-members. Both OPEC and non-OPEC members need to solve the situation, and therein lies the impasse with crude oil. So he's calling for a discussion between OPEC and non-OPEC members to improve the pricing situation for oil. Looking at the week, since we're on Monday here, tomorrow we're looking for U.S. FHFA house pricing index, S&P Case-Shiller, services PMI, consumer confidence, and then we're getting comments from BOE's Carney. Wednesday, we get the German GfK consumer confidence, retail sales, UK or US new home sales, and the FOMC rate decision on Wednesday. Might want to mark that down. Thursday, UK GDP index of services, US durable goods orders, pending home sales, ECB's Costa. Friday, UK GfK consumer confidence, Eurozone CPI, US core PCE, GDP, and Chicago PMI. On Friday, Fed's Williams speaks as well. So looks like Tomorrow we get a few numbers, the Case-Shiller Services PMI and Consumer Confidence, and Wednesday for the U.S. session, new home sales, and then the FOMC rate decision at 1 o'clock. Thursday, it's somewhat quiet. We get U.S. durable goods orders, pending home sales. And on Friday, we have a series of fairly important numbers, the core PCE, GDP, and Chicago PMI. For today, what's on deck for today? Not much left. I'm seeing a couple of ECB speakers. One's at 12:30 Eastern, 11:30 Central. ECB's Lautenschlager. And then at noon Central, 1 Eastern, we have Draghi speaking in Frankfurt with a pre-released, with his speech being pre-released. You might want to pay attention to that. Other than that, it's fairly quiet on the list of numbers. Let's switch gears and look at what the market's up to. So on Friday, for those who attended the Trader Bite, the expectation is that we would open out of range, and we were looking for responsive selling back into the prior day's range. I'm always talking about the extent of that push lower. I still have to pay attention depending on who is in control. So if it's short to intermediate traders are in control, then you get this sort of thing where daily price levels are respected. If it's a higher time frame player, a higher OTF, then generally there's not much respect for the day time frame levels like the prior day's high here. So the expectation for Friday was for it to respond back to about 71.50 is the extent of it. With that being said, of course, the expectation is I have to watch for daytime frame levels because this early in the game we don't know who's in control. But the expectation, the primary expectation is it could dig as deep as the value high of the prior day at 71.50. Or 72 is the number, and then the expectation was for it to chop around and then start making its way up to that 1915 with a check at 1903. The high of Friday is 1902.25. I'll show you where the 1903 comes from. But we got to 1902 quarter, and we were unable to breach the prior day's range. So it's very important to see that the initial key rotation, you see this 10.25 point rotation here, 10.75 point rotation here. That's what I'm looking for when I say I'm watching for how the market reacts once it opens. I'm paying particular attention to rotations. Which way is the strongest rotation moving? That is an early tip of the hand or an early indication of who is more likely to be in control early on. This was the bulls. It pushed the other side of the opening swing. The opening swing is right here. So it took out the high I put in immediately after the open. And so from here, I'm looking to the long side, and it was okay on the long side until it failed at the mid, back through the opening swing. The mid is right there. The mid is this dark blue line. This line here that keeps varying. Once it breaks the mid, then I'm looking for, okay, we're pushing the other way. Look for a mid pullback, and that was a sweet trade right there at the 93.25. The mid was at 93. It pushed through by a tick, and then the target becomes the prior day's high, and then the prior day's value area. And if it cannot hold the value area, then the extended target becomes 1865, the prior day's most traded price, which is also known as the point of control. That's what I was looking for here. Obviously, it gave us some pretty good scales here, but could not get through. And then once it pushed the other way, now we're looking for a change in sentiment. The point of control for a good portion of the day was inside of the opening swing. So was the mid. So was the VWAP. So that's an indication of a balance of potential for a balanced market coming up, or the market likely balancing into the session or chopping around, which means that we can't be aggressive with pullbacks and we can't be aggressive with breakouts. If you trade breakouts, I don't trade breakouts. But the idea here, once it crosses through, then we're looking for a pullback to mid for a push the other way to the IB high. On Friday, we had a breach of the initial balance low down here, and we also had a breach of the initial balance high. It happened once there, and then we had a failed auction on a second attempt up here, which makes this day neutral. And it was neutral normal because the day finished inside of the initial balance. It finished inside of the first hour's range, which makes it a neutral day. The key thing to take away, though, is that value has moved up. The point of control has moved up. Price action is higher, higher lows, higher highs. So overall, bullish. And so what that means is we have to keep paying attention to the micro composite and the areas we've traded before. So before Friday, we had two micro composites broken up for this region, and we started to kind of engulf these days, and we're looking at we're essentially looking for, okay, if it's in this balance zone, it's basically folding over itself here. If it's in this balance zone, what areas is it likely to test before it rests from below? And that area is the all famous 1915 is the point of control in this area, and that is the expected target above us. We couldn't quite get there on Friday. Just did not have enough fuel. Last week was pretty volatile. I think traders wanted to leave as early as possible on Friday, but it's still well on its way. This morning it's trading at 1889, 1890, so it's trading right into this low volume node right here, right into this low volume node. Right below it, we have cleared the low volume node below us, which was at 48, which was at 48.75. Now with the MC, it's at 49.75. And what we have is a market that's likely to range in between these two lines right here for today. Given the overnight sentiment, the flight to risk, or the more risk-averse sentiment, it would not be a surprise for us to continue to be responsive, or to be responsive to the Thursday's range and initiative away from Friday. Meaning, the expectation is this is likely to try to push into the value area and test this point of control, but do not be surprised if it has a very difficult time here and starts to move down and breach the 83 quarter and start moving towards the 72 and then 65 ultimately for a pullback that I expect to be a base and then a continuation higher. The market is likely to want to advertise for buyers to step in today. It's very important to recognize that that is an integral and a very important part of the auction, in that we're not looking at where are the lines drawn by this charting package. We're looking at what is the auction doing? What is the story behind the action here? What is the narrative that the market's telling us? And it's generated by the market itself. And so we respond to what the market says as opposed to what we want to happen. I don't want it to sell off so that I can be right on my primary hypo. I don't want it to do anything. All I care about is here's what it could do. Here are multiple scenarios of what it could do. Once it shows that it's doing that, then my job is to find a setup, to find an indication of strength and something to lean against, something to use for defense, and then go on the attack in that direction. This morning I'll be watching to see how it responds up, if it gets any response up, and then I'm looking for it to turn into a chop, and as soon as I get a big rotation down, I'm looking for the pullback on that rotation for a push into Thursday's range. That's the primary trading plan, the primary hypo for the day. However, I could just as easily find that the market tries to be initiative at first by selling, takes out the overnight low, tests, comes back into the value area, and as soon as it takes out the point of control, then I'm looking for a pullback, for a push, and a continuation to 1915. The expectation, though, is that today would be a buyer-seeking day, not a seller-seeking day, meaning it will more likely advertise for lower prices before it rotates up. Something I want to show you here real quick as we review the beginning of the week. Here's the weekly market profile chart. Each one of these profiles represents 1 week. Each day of the week is colored differently. So you could see that the beginning of the year, we traded up top at the beginning, and then we finished right at the bottom on the first week of the year. The next week of the year, the red starts up here, and then we finished out of value near the bottom the second week. Last week, though, we started from below, and we just rotated up. Of course, Monday being a holiday, we're missing a day, but look at where it finished for the week. So this looks like a base, and remember I said on Thursday after Wednesday's action that Wednesday is a very strong benchmark day. It is a day that marks at least a temporary reversal, but we saw a lot of strength on Wednesday with a 65-point rally almost directly up, and that's likely to reverse how things are going for the shorts, at least short term. So overall, the market has attempted to recover here. We've pulled all the way back to 1900. When I merged these 3 weeks together to create a micro composite, I know I'm over my time here. It's very important to now note what the key areas are that the market's battling at. 1903, that's where that number comes from. 1903, right there. That is the MC, that is the MC, the MCLVN. The next MCLVN is at 8275 or so, right here. Oh, yeah, the next. So we have a market that is right here today, 8275 to 1903, and then the next key area down is likely to be this 1864, 1865 area to test. So today, if it does not hold into this 1882 by the close, and it doesn't auction beneath it and reject that area, then we're likely to drive lower tomorrow and start moving back towards 1865 and reclaiming that naked point of control we left behind from last Thursday. Okay, I hope that makes sense. I won't cover anything else. I'll let you go there. Again, just your job as a trader, if you are a trader, a day trader, your job as a trader is to identify the move that has the highest probability and to just push from that direction until the market tells you different. Your job is not to invent what you want to see and to trade what you've invented in your own mind. I see people doing that all the time. Well, it has to go up now. It has to. It's been selling for too long. It's never sold for this long. It has to base. It's going to base. It must base, or it must sell off. It must continue. That's all nonsense. You are to look at what the market's doing and as objectively as possible, look at the actual facts. You're a detective. You're not. You can't build your case on expectations and what you believe happened. It's what you see. It's evidence based, and we rely on probabilities for that, and we lean on areas of support and resistance to be able to support our trade in the direction so that we can mitigate our risk as quickly as possible by taking scales out or by reducing our position and taking profits so that we can improve our overall risk profile and create an asymmetric risk situation. I might have lost you in all that, but the biggest thing to take away is trade what you see, not what you think. Good luck.